record a quick video on the differences between Better Pro-Am and Better Volume. And this video has been prompted by a great little email I got this weekend from Neil. Neil writes, Barry, posted my best 6 consecutive days trading lately, up 24.25 points over the last 6 trading sessions. Well, that's excellent performance. Well done, Neil. Do you think Better Volume Indicator would complement Sine Wave, Pro-Am and Momentum? It seems as though you don't use it on your trading charts, but I do believe I see it on the daily charts you post. I'm using Ninja, so don't know if it's worth the small cost. Thanks for everything, Neil. So Neil's right. I do use Better Volume on my daily charts, but I don't use it on my intraday charts. And I'm going to just explain kind of the reasons for that. So Better Volume, just a little bit of history, was the first piece of open code I put on the site. It's almost 5 years ago, something like that. And back in the day, you know, I loved it. The difference between Better Pro-Am and Better Volume is this. Better Volume looks at the volume and the range of the bar and looks at effectively the speed, the ease at which volume can churn through price. So if the market kind of moves easily through price with a certain amount of volume, there's no kind of resistance in the way, and you'll see kind of exhaustion bars. Whereas if you start to see buying and selling coming in compressing ranges, you see high churn and things get harder and price moves slower through the range, and therefore the speed kind of slows down. So Better Volume is using the volume and the range of the bar. Better Pro-Am is just looking at the average trade size alone and identifying high average trade size and low average trade size to pick up where the professionals are active and where the amateurs are active. Now, as an example, just to show you the comparison of the two, I'm just going to go through Friday's charts using Better Pro-Am and then Better Volume. So 1500 tip bar chart was kind of the trusty 1500 chart that I use for most of my signals, and you can see this is the open on Friday. Pre-open we had a nice little signal pullback to end of trend with a whole bunch of blue professional bars kind of coming in, and then we sold off into a Rambo pattern. We bounced at this Rambo pattern. You can see Rambo with exhaustion, buying or selling, is an unstable pattern, and then we see the professionals step in, a little blue professional bar, and we rally back to the open. Now at the open you're always going to see a lot of high average trade size, a lot of professionals taking positions at the beginning of the day, kind of looking for a day trade, and so it's not unusual to see that number of blue professional bars kind of around the open. Got a little bit of exhaustion buying and so on, and then we go through a Rambo to Rambo consolidation. We kind of sell off, you know, the amateurs are a little bit too anxious, going short. We come back up and they're kind of reversing, being stopped out of their positions, thinking, oh my god, we're going to actually break up through the top of this range. We got another Rambo pattern. You can see a whole series of amateur up bars into a Rambo pattern, and then we sell off. And then this move on the way down, first of all we get exhaustion selling, getting the move going through a support level, break into a downtrend, and then the move ends off when we got another exhaustion pattern at a left shoulder, and we go through pullback to end of trend. I say always, you know, look for the mirroring of that volume. That's the volume getting us going, and that's that same volume taking profits at the bottom. So pullback to end of trend, a whole bunch of blue professional bars coming in at the lows. We test with amateur bars down here into Rambo patterns, less selling going on, and then we kind of rally into the close. So Better Pro-Am is showing you where the amateurs are active, where the professionals are active, and kind of playing along, fading the amateurs, which is going the opposite direction of the amateurs, and then going along with the professionals. Now, same day's trade, looking at this on a 2-minute chart using Better Volume. So here's the same kind of activity where we start the day with a little bit of a rally into the open and a whole bunch of blue professional bars kind of coming in here. Now, blue professional bars on Better Volume show where there's high volume churn. So that is relatively high volume and relatively low range, showing that there's kind of compression of range where the volume kind of comes in. Now, since we're rallying up into that open, the assumption is that there's kind of selling going on, compressing that range of those bars, and people getting short, professionals getting short into that kind of rally. So we can't get going, can't get through 94s, and we sell off with an exhaustion selling bar showing us the strength of the down move. We rally back with a couple of red up bars, just showing a little bit of exhaustion buying going on there. weak close into that bar. We sold off quite a lot into that rally back into that zone where the professionals were kind of selling it down because we have high volume churn, and then the down move starts. Exhaustion selling going on here, setting us off. This is large volume getting the move going, and this is kind of similar to better X trend where we've got large volume exhaustion buying and selling, getting moves going and ending moves. So this move kind of gets going on the downside, and you see down here we have a little bit of a short covering rally with exhaustion buying red up bars into compression here. So coming back into this breakdown zone where support becomes resistance, you can see we see blue professional bars, high churn coming in here, and this is sellers entering the market, compressing the range at this bars, anxious to sell it, and so although there's quite a lot of volume going through there, the range of those bars is compressed because the sellers are coming in and keeping the range low, anxious to get short. And then we get going to the downside, another exhaustion selling bar kind of showing getting on board this move on the way down, and then we end the move with another exhaustion pattern here at 10:30. So a little bit of a test down here with low volume down bars into a previous low with those yellow bars here. So that's low volume testing here. A little bit of short covering rally. We come back it again, exhaustion selling. There's actually a little test bar there again, yellow bar testing into that lows, and then we set off to the upside again. And then next time we see compression happening here with high volume churn. This is the range getting compressed, the volume's relatively high. We got sellers coming into the market at this point here, and we kind of sell off to the downside. So you can interpret it kind of in a similar way to better Pro-Am through this move. My personal preference is to use kind of larger time frames with better volume. So a 2-minute chart kind of intraday would give you kind of a big picture of what's kind of going on. What I find is when you start going down to the lower time frames, the 1-minute chart or a 1500-minute chart with better volume, there's just a little bit too much kind of going on. So I'll just show you that briefly. So this is better volume on a 1-minute chart. Again, the same thing at the open, all of that kind of selling coming in, compressing the ranges, and we've got high volume churn happening there, and we set off on the downside here with exhaustion selling bars kind of going on. We come back into, we keep on coming back. This is like a 2-bar reversal, exhaustion buying and selling. We come back in to test again, and this time we get a blue professional bar compressing the range there. Little test back up with a low volume test, showing no demand at that point, and then we set off to the downside. Exhaustion selling through a support level as this move kind of gets going. The move kind of runs out of steam here. We see blue professional bars kind of coming in, trying to take profits at this point, kind of buying that dip, buying that low, compressing the range in there, and we go through a short covering rally. Same thing coming up here. This is where we're coming back into the breakdown level. The sellers kind of come in. We got these blue professional bars showing high churn, showing that there are sellers coming in and compressing the range. We get going to the downside, come back up for another little test showing no demand with little low volume bars there, and then we set off to our pullback to end of trend on a 1-minute chart. Same thing here, exhaustion selling. We come back in, high volume churn, compressing the range as people are buying that lows. We set off to the upside, and then come into this pullback to end of trend sequence, marking this top, taking profits here and here, again compressing the range with high volume churn at this point here, until we kind of rally into the close for the day. So on a 1-minute chart, for me it's a little bit too kind of multicolored going on here. When you start to look at this on a 1500 tip bar chart, again you can see the same type of things kind of going on. Here are the blue professional bars compressing the range, high volume churn here, picking it up at these lows, and then as we come back up to that breakdown level, same thing, blue professional bars compressing the range, showing the sellers coming in at that point. We come down to our pullback to end of trend, again more of these high volume churn bars down at the lows, showing that the range is being compressed as people are buying those lows. So I think you can hear it as I'm talking through this chart. For me, the bars that make the most kind of sense on better volume are the high volume churn bars, these blue bars here, where the range is being compressed as people are taking profits and reversing positions. So here, here, and on this little dip kind of here. So the blue high volume churn bars on better volume kind of helping me kind of make decisions here. The exhaustion selling bars, the red and the blue, just almost kind of continuation bars if you like. But ease of reading, like the 1500 tip bar chart with Better Pro Am, with just amateurs and professionals here, just showing where that activity is happening, and you can kind of judge where the high average trade size kind of comes in with that churn. That they're picking up the same activity going on. The average trade size is increasing and the range is decreasing, showing those kind of churning bars, which is where the professionals are starting to take profits or reverse the market and so on. So although they're based on a different algorithm, a different kind of calculation of what's going on, they're still kind of picking up the same kind of activity. But for my money, I like Better Pro Am. It's just neater and cleaner, and I like thinking of the market in terms of professional and amateur activity as a simplification of what's going on. Whereas Better Volume, I'm having to kind of think a little bit harder, and it's a little bit too kind of multicolored for my mind, because we've got the momentum signals and we've got the better sine wave support and resistance going on at the same time. So hope that answers the question, Neil. Kind of gives you a little bit of a sense of what better volume would look like. My feeling is always reduce the number of indicators that you have and make sure they're non-correlated. And I've got, in terms of Better Pro Am, it's picking up that kind of average trade size and the volume kind of calculation. So I don't want to have too many indicators, or I don't want to double up on that information. So for me, I'm getting the information out of Better Pro Am. No need to use Better Volume. But as I said, you do see it on the daily chart to look at, just as a big picture, just because I find it just useful on the bigger time frames to look at what's going on. There we go. Hope you're enjoying your weekend and looking forward to next week's trade.